I mean, a reasonable start to the week, but of course we have the US closed today for that Labor Day holiday, so we really have to wait until tomorrow evening until we see how markets are going to progress from here, aren't we?
Absolutely. I mean, the green start was convincing, and it kind of rallied up towards the end there. We saw London sort of in the last 15 or 20 minutes of our trading time. London started moving higher. We tracked them higher. Finished a couple of points off the high of the day. Volume's a bit thin, and that's, as you said, to be expected. The US is closed, and really we're going to get a much better feel for this market sort of come tomorrow afternoon when the US opens. But from what we saw today, strong, convincing, there were buyers pretty much everywhere.
And of course, we're seeing some renewed corporate activity in the European and US markets, with Kraft making a $16.7 billion bid for Cadbury, the other food group. And of course, that's probably a good sign in these markets that companies are looking at these large mergers, and do you think it could perhaps spur some more activity and some more upward direction on the share indices?
Short answer, absolutely, I think so. I mean, we also saw last week Disney taking over Marvel Comics and the like. And what it's telling us is, I mean, these mergers, they require capital. And it says that the capital is starting to flow again. I mean, that really was a big part of the problem in the second half of last year. And bleeding into this year, the reserve banks and the Fed in particular were throwing money at the problem, but the banks just weren't lending to anyone. They were sitting on that cash. Now we're starting to see that money get out there, create some activity. It's going to start in the US, it's going to start in Europe. That's traditionally where it does start, but it's going to flow around the world. Obviously, some of our companies might be under target as well, but it means we're getting those deals happening again, and that's going to be positive for markets. And people are going to look around and try and position themselves for possible takeovers that could be coming down the line.
Now, of course, we had the platinum companies up quite nicely today. We had Implat's up 2%, Anglo-Plat's also up. We have news this evening that the Implat strike could be off and that workers could return to that Rustenburg mine by this evening. We had Lonmin, though, up 5.7%. Simon, do you think that Xstrata could be coming back into the market and make another play for Lonmin now that it looks like Anglo-Americans answer the picture?
Yes, I mean, let's break it up into pieces. They can come back. Their period, when they did the failed bid last year, you're locked out. You said come back in a year. That is pretty much up or close to being up, so that gives them the option. The Anglo deal is simply not going to happen. They can talk it anywhere they want, but it's like that Rio Tinto deal, Rio Tinto Billiton deal last year. It's going nowhere. It's going to die. They must pull it and move on. And that then leaves Xstrata, and they very much are a company who are, you know, they like to buy stuff. That's what they seem to do, more than just being miners in many ways. I think they're going to have another look at Lonmin. I think they're going to look at it in a sense of, I think a lot of the Lonmin shareholders are regretting the turning it down, and that price was quite attractive. And I think from Xstrata's point of view, they're going to say quite simply, they're going to come in at a lower price. Platinum's in a different space these days. Demand is in a different space. And I think they're going to say, hey, if we thought it was a good asset at X, can't we maybe go in at less than X and get even a better deal for the shareholders?
Well, Simon, we had a few companies reporting today, industrial groups that really show how the South African economy is performing at the moment. So that's Wilson Bailey, we had Ceramic Industries, and also AVI. And perhaps starting with Wilson Bailey, what was your view on those results?
Short answer, on the surface, great results. I mean, these construction guys are absolutely, they're amazing in how they pull rabbits out of the hat again and again. Their offshore arms are doing very, very well. Their order book is strong. They're in some big projects that extend further than just 2010, although of course some of them, the soccer stadium in Durban, for example, is one of those that is kind of drawing down and sort of in its final year. What did worry me about that is that their margins took a fair hit from about 8.4 down to 7.2, which was quite a significant hit on margins. They said, and under these circumstances where we're seeing issues, I mean, price issues such as Eskom, such as labour, to be expected, and times getting more tough, companies are being more aggressive. But I think we want to see what's going to happen in that margin going forward. But on the surface, really good set of numbers. The market liked pushing it higher as well.
Of course, those results from Ceramic Industries not nearly as strong, but of course this is a consumer-facing company, and we know the consumer has been under pressure over the past year.
Absolutely, you know, and they sell sanitary ware and towels and the like. And you know, if I've got a bath and it works, why do I need to go out and buy a second bath? I mean, I can buy a fancy one and all types of fancy and towels and the like. But if my bathroom is working, I can hold back and say, hang on, this is tough times. So it really becomes discretionary. Without all those new complexes and the like going up, they're under pressure. People aren't refurbishing. Consumers are hurting. So that's to be expected. I thought the numbers were perhaps, I know they'd given a trading update, I thought they were perhaps a little bit more more scary than certainly I'd been looking to expecting to come forward. But I suppose broadly in line with what we're seeing from consumer stocks coming through, which is essentially what they are.
Mm-hmm. How about AVI? They boosted their headline earnings per share by 1/10, and of course that was due to, in parts, due to rising prices for their goods.
Yeah, absolutely. The inflation input, they were able to pass much of it on, although again it hurt margins to a degree. The thing that they've got a really good stable of really good brands, but they're kind of more that middle level of brands. And in the tough times, consumers are shopping down and down more. And witness, we see Woolworths under pressure, we see ShopRite doing well. And I think they've lost some customers who have gone down. They should have picked up some who sort of moved into their space. Seems not to have happened. But as I also commented, food's become a bit of a hot potato in terms of food. Prices are not really a political issue, but certainly pressure on them to not pass all those costs on, which hurts them. And they also had, which really hurt them, they had locked forward some contracts in maize and the like, sort of hedged the positions. The prices then fell markedly, but they were locked in at those higher prices. That's now out of the way, so going forward, things should be looking better for them.